What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market, and it was better than yesterday. So the Dow, S&P 500 soar, and the NASDAQ, it says, rebounds in best day since November to cap a volatile week. So let's get into what the news is saying about the stock market, shall we? So it says U.S. stocks bounced back sharply on Friday to cap a volatile week on Wall Street as the risk of a government shutdown eased while investors stayed on watch for the next move in an escalating trade war. The S&P 500 climbed more than 2.1% after the benchmark index on Thursday, it sank on Thursday to close in correction territory. So the NASDAQ composite jumped 2.6% as tech stocks soared. The Dow Jones Industrial Average moved up more than 600 points, or 1.6%, which is a good thing because I've been taking some hits over the last several weeks. But that's what happens in the stock market. It's volatile. It's not always going up. It's not always going down. Sometimes it can stay in the same place. But this is what happens when you deal with the stock market. And I am all for it. So it says stocks have had a rough week of uncertainty over President Donald Trump's tariff shifts, whipsawed market, and overshadowed otherwise encouraging signals about the economy. All three major indexes registered weekly losses of more than 2% after the S&P 500 joined the NASDAQ composite in correction. It took less than a month for the benchmark index to fall into correction, the fifth fastest such move in the past 75 years, according to Ritholtz Wealth Management. So I guess they're saying the market corrected itself. Maybe some stocks were overpriced, so now they're back in the range in which they should be priced at. I don't understand that because the market was volatile and going down because of the tariff issues, right? That President Trump is introducing and the rebuttal that we received from Europe and Canada. So I don't know, but I'm continuing to dollar cost average into the stock market. I do know that much. But Wall Street spirits brightened as Senate Democratic leader Chuck Schumer backed off a threat to block a funding bill aimed at averting a government shutdown at the weekend. At the same time, gold broke above $3,000 an ounce for the first time amid warning about the economic damage from Trump's tariffs. On Thursday, Trump said he didn't plan to bend at all in the escalating round of tit-for-tat tariffs with America's biggest trading partners. Concerns that the U.S. economy is showing signs of strain have receded after data this week showed inflation heading in the direction desired by the Federal Reserve, which holds its policy meeting next week. But the details of the data could give policymakers pause for thought. So, the market could be down right now, and then maybe in the next couple months, it may start to go up. So if you're not investing, you may miss out on these gains. And what's happening now in the market is nothing new. It happens all the time. When you start investing, you will notice these cycles that the market goes in. But on average, like I've stated so many times before, the S&P 500 has brought back at least 10% a year. At least 10% average over the last 100 years. So, a 10% gain is better than no gain. It's better than the interest that you get on your money in the banks. So it's a risk that I'm willing to take. That's why I budget and I dollar cost average into the stock market each month. So, some say putting money in the stock market is like gambling. So you have to be prepared and be willing to lose some money. But that's why you have to be smart about your investments. Don't just try and find like the best single stock. It's safer to invest into the S&P 500, like the SPLG ETF like what I'm investing in, and it consists of the 500 largest companies in the United States. Information technology ETFs. Don't just put all your money into like one single stock. So having my money into the S&P 500, my money is spread out among the 500 largest companies. So if one company has a bad year, bad day, or goes out of business, I don't lose all of my money, right? So just think about that. You have to be smart about your investments. Don't invest just to invest. You need to know what you're actually investing in. So anyway, it says it's clear, however, that consumers are feeling less and less enthused about the state of their pocketbooks. The University of Michigan's Consumer Sentiment Survey came in at 57.9 on Friday, well below expectations of 63, right? So, in order for your pockets not to be affected, you have to be smart about your money. You have to invest. You have to budget. You have to save. You have to live below your means, or you have to live within your means. You have to have control and discipline. Discipline is key. That's the biggest thing, is having the discipline to do what needs to be done, so when things do happen, you're prepared because you have plans in place. Like big ticket items, like say your water heater breaks, you can pull money from your emergency fund. You can easily do that because you no longer have debt. You're no longer in personal loan debt, card debt, credit card debt, student loan debt. You've gotten rid of your debt. You're not creating any more debt, and you're living within your means. You have your emergency fund set off to the side. You may have another pocket of savings for whatever reason. You can do whatever you want to do with your money, right? Just be smart. So as prices continue to increase, which is out of your control, you're able to pay for it. It sucks, but you're still able to pay for it. So yeah, so that's all the news has to say about the stock market today. Let's see what some of these single stocks in my S&P 500 ETFs and information technology ETFs did today. So Broadcom went up $4.58 today, which is great. Palantir went up $6.62 today, which is good. Tesla went up $9.30. My S&P 500 ETF SPLG went up $1.32. My information technology ETF FTEC went up $5.25, which is good. Nvidia today went up $6.09, which is good. I mean, if you have been continuing to invest in these stocks, like Nvidia got down to, Nvidia got down to $109, and I bought more of the stock. My S&P 500 stock went down. My information technology stock went down. Broadcom went down. Palantir went down. I bought more of it. Tesla went down big time. I bought more. So that's why you buy the dip. If you have done the research and you are sure that you're investing your money into good growth stock or ETFs, the stock price will go up. And the stock price has gone up for Nvidia. Nvidia has gone up $12. Like I said, I saw it as low as $109, and now it's back up to $121. It could go back down again. Oh well. If it goes back down, if there's nothing fundamentally wrong with the company, I will continue to invest. I will continue to pay attention to the reports that come out on the company. I will pay attention to its earnings reports. So I would know if and when to pull my money out, right? But if there's nothing wrong with these companies, if there's nothing wrong with what I'm investing my money into, I will continue to dollar cost average into these stocks. And again, because the price is lower, I now gain more shares. And if you're investing into your company's 401k, right, as the prices go down, you continue to invest your 15 or more percent. If the stock prices are lower within your 401k plan, you're going to buy more shares. So then when it goes up, you make more money and you receive more dividends if you have funds that are paying you dividends within those plans, right? So yeah, so that's all for today. It's the weekend here. It's nice and sunny outside, so I may I plan on going for a walk, like a 4-mile walk, so capture my miles on my little Fitbit. So you guys, again, take care of your health. Health is wealth. Again, live below your means, get out of debt, create a budget. You need a plan. First, you need to want to change. And then once you make that decision to change, then come up with a plan. Create a budget. If you need help, ask for help. Don't try to figure all this stuff out on your own, especially if it's not coming to you easily. Ask questions. And Google can also be your friends if you ask it the right questions, or AI. So yeah. Oh, disclaimer: I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel is for entertainment and informational purposes only. So please consult with a financial advisor before you invest any of your money. All right, so you guys take care. Have a blessed weekend. Peace.